All right, hi everyone. My name is Connie Ko, Columbia SPS alumni. I graduated in 2023 this year. I studied applied analytics with my interest in the entrepreneurship and startup ecosystems. It's been really great being a part of working group for the SPS Entrepreneurs Network. So the Entrepreneurs Network is a shared interest group for SPS alumni, student, and faculty members who are interested and involved in entrepreneurship, startup, and venture capital. So we are here to foster SPS community to connect and share knowledge, opportunities, and resources through virtual and in-person programs and events. I'll pass it over to Chase to introduce himself and our speakers and kick off our panel.
Thank you, Connie. Hi, everyone. Good afternoon. My name is Chase Alston, a graduate of the Executive Masters of Science and Tech Management program at SPS. And we really appreciate you all joining us today. The main thing we want to do today is highlight two great people, two great female business people. One with the perspective of the entrepreneur and one with the perspective of an investor. So with that, what I would like to do is start by introducing Marie. Marie, if you could, please go ahead and give an introduction to the group.
Hi, my name is Marie Lesaicherre. I am a Columbia Business School, London Business School alumni, an MBAC 13, and I'm the founder and CEO of a mental health startup called Akesa Health.
Thank you, Marie. And then Maria, if you could, please go ahead and introduce yourself as well.
Hello, everyone. I'm thrilled to be here. I'm a huge fan of Columbia. I have a lot of good friends, are alumni, and I love this community. So I'm a partner at Crescent Ridge. I've been there for the last 4 years, and my background is in engineering, private equity, and several other operational roles.
Great. Thank you, Maria. And so we're super excited here. And the format, kind of just briefly for everyone as we work through this, I'll be going back and forth between Marie and Maria, idea being that we can show the parallels, right, in this ecosystem and how each side is operating and kind of learning some of the really insightful practices that both are using as they navigate the ecosystem. So the first question I want to ask is for you, Maria. For you, Marie. Could you tell us more about Akesa Health and what inspired you to start it?
So Akesa Health is a mental health digital startup. So we provide digital solutions. So right now it's an app that helps people transform stress and anxiety into resilience on their own, using a lot of neuroscience tool and tapping into the brain's self-healing potential. So what we call brain plasticity. So short session that help people not only reduce stress and anxiety, but also transform it into resilience on their own. The business was founded out of frustration. Like, I think a lot of entrepreneurs see something that is not working and they're like, I'm going to fix it. And so 10 years ago, 11 years ago, right now, as I was finishing my MBA, I eventually had to deal with a lot of childhood trauma that I kind of ran away from because that was the family model. Realized a few years later, I suffered from PTSD. And so tried a lot of mental health solutions. I was fortunate to have the time, the knowledge, and the money to take care of this, but that's not the case for everybody else. And so got very frustrated with the stigma still associated with mental health and the shortage of scientifically rooted solutions to help people deal with stress and anxiety and trauma. And so I had been reading about this for the past decades, and eventually 2 years ago took the plunge. I started connecting the dots about a lot of things and got fascinated by the brain and the brain's ability to self-heal. So this is how Akesa was founded, and since then it has moved extremely fast, actually. Yeah.
Yeah, it's such an awesome concept. And then for you, I guess you kind of described it for you, like ultimately, what was your call to action, right? Like what made you want to be an entrepreneur?
So, you hear a lot of stories in the US, right? People who were like 7-year-olds selling lemonades and they knew they would always be business people. It wasn't my case. I'm a scientist by training, but I'm an engineer by training. I love to develop products and I love to fix problems. I'm a fixer. And so I never knew I was an entrepreneur, but actually, when I did the MBA, I learned about what is called an intrapreneur. So it's an entrepreneur within a big company. And when I was at GE, I was an entrepreneur. I was hired in China. My boss was in the US, and he was like, you're going to hire the team, you're going to launch the business, you're going to launch the infrastructure. When you have a problem, you call me up. Otherwise, you pretty much run with it. And I loved it. And this is what I did with GE. So later on, I realized I had always been an entrepreneur. I just didn't know it. And so when I finished the MBA, so first of all, during the MBA, I learned a lot about entrepreneurship. I took a lot of classes. And then afterwards I said, okay, I'm going to see what this is about actually. And then I started launching businesses. But the inception was not so much the business side of it. It was the engineering, fix the problem kind of approach. Yeah.
That's awesome. Yeah, I think that's like a true story that resonates really well with me, and I'm sure many others on the call as well, of just like wanting to solve problems and that leading you down that path, right? So with that, I want to switch over to Maria. And Maria, can you just tell us a little bit more about Crescent Ridge and what led you there?
Yeah, sure. Crescent Ridge is an early stage venture firm tackling a gap in the ecosystem that we identified. And this gap is the lack of venture funding for entrepreneurs who don't fit the traditional venture Silicon Valley mold, who are building very good businesses that are not unicorns, but in the range of 50 to 100 million scalable businesses. And this focus has been stronger because, I joined almost 4 years ago. My partner Allison has been doing it for 10 years already. And of course, we made a lot of mistakes. We learned a lot. But we realized that all our exits and successful companies, they were very capital efficient. They raised not like a huge amount of funding in the very early stage. And they were exiting for $50 to $100 million, raising less than 3 to 5 in equity. So that's why we came up with this thesis. And we're especially passionate about helping entrepreneurs who desire to have a positive impact in the world and who also want to be financially independent from later stage VC. And we're, for the most part, agnostic, industry agnostic. We have a mandate of investing in entrepreneurs that are making like good impact in health, people, and planet. And I joined 4 years ago, and that was through a good friend from business school that introduced me to my partner, Allison.
Yeah, it's a great background. And so for you, what was your major lure to inspire you to be an investor, right? Like what was it for you that connected with you in a way that made you really want to do that?
Yeah, sure. That's a good question. And I wish I had like a perfect answer and beautiful answer that is like, this was connecting all the dots and it was a perfect story. But the truth is that I've been lost many times in my career. And I started as an engineer, probably because, I come from a family of engineers and I had that expectation of being an engineer. And I was good at numbers. I was like, yeah, sure, I'm going to be an engineer. And I realized like, I don't like it. And so that has happened a few times in my career. There was a lot of trial and error. I had to discern many times what to do next. And it took me a while to realize what are my gifts and what I do right and what I like and what is the intersection, right? So eventually I realized some of the patterns in different things that I loved. And I worked in private equity after business school. I came to the US 12 years ago to go to business school at Stanford. And after that, I got into private equity. I really liked investing, and I developed like a good understanding of what it takes to build very, businesses that have a good legacy and that last for a long time. And I think because of my understanding of what I do right and all this journey, I ended up like realizing I love venture and I want to do this in a way that is more efficient and creating more companies that are good and less waste. So yeah, so that's been my journey, but it hasn't been like very linear. There's been a lot of like trial and error.
I think that's a really cool parallel, right? Like that's an entrepreneurial path. I mean, there's so many pivots in the entrepreneurial world too. So it sounds as though you really get it and what people are going through too. And as an investor, that's obviously really important. Being that VC is, traditionally pretty male dominated. What challenges did you face? And then, on the backside of that, how do you overcome them?
Yeah, that's a good question. So I've always been in male-dominated industries and settings for the most part. I mean, of course, I was one of the, very few, I don't even remember. I mean, I can count them with my hands, women in engineering school, right? And then I've been in aerospace, in engineering, and always like one of the few women. And to be honest with you, I haven't really thought much of the challenges. I think that, of course, there's a lot of challenges. And I think life is unfair and, but I think you cannot sit and do nothing and complain that life is unfair. I think you have to create your own game and figure out how you can win. What are your unique competitive advantages to win? And I think that's what I did. Like most of my life, I've been spending a lot of time thinking about that instead of like, oh, it's terrible. I'm a woman and, I'm a minority. So that's always been my mindset. I think that that's what we do at Crescent Ridge. We decided to play in a game that we can win. We have a small fund. We're not Sequoia, right? And we're like two female investors. And, there's like a lot of disadvantages of being like female investors. There's a lot of research that says that when you invest in a company, then it's very unlikely to be followed on by male VCs. But at the same time, it's a lot more likely to have female investors investing in your company if you're a female. So it's like a catch-22, and it looks like it's hard to win. But what we realize is like, what do we do uniquely well, and how we can win in this game of venture. And that's been like a lot of our process and thinking about how to create a strategy that is created around our unique competitive advantages. And we're doing it. So, yeah.
Yeah, you definitely are. I mean, it's amazing what you're doing. It's a great perspective. Switching back to Marie here for a minute. So Marie, what's your current strategy for financing your venture? And then have you looked at fundraising to date?
So bootstrapped pretty much, raised very little capital, raised 60K, put my own money, got lucky to get deals actually pretty early on, even before the app was launched. So I am, my approach is stay frugal until you find product market fit. It's until you know that you have something that the market is going to buy. There's no point putting oil on the fire. So it's keep everything as lean as possible, and then raise money to really, when you can scale, then you scale, and then it's a growth game. But so I've kept the business extremely frugal, and right now I am back actually, despite the economy, into looking into fundraising because we have great testimonials and we know it's going to work. So, and I want to get the Android developed actually. Yeah, but it's so friends and family, and then professional network early on, angel investors. But we are looking at partnerships as well, people who want maybe to develop the Android app for lifetime access. So I think people always think it's friend and family, and then it's angel, and then it's VC, right? There are a lot more ways to skin the cat. Sorry for the poor cat, but there are a lot more ways to get cash into the business. Actually, I mean, last year we got 2 deals for 52K. And we raised 60K. I mean, when you think about it, it's, money. I think people have to be very creative about funding the business. Yeah.
No, that's really good perspective. It's really interesting, and definitely an alternative, right, to straight, VC, the traditional paths. And with that, obviously, the pivots you talked about are probably super important as you find that product market fit. So for you, what have you learned while developing the product, and then what pivots have you had to make throughout your journey?
So couple of things. So the app contains two different kind of sessions. The first one is really to relax, recharge the battery. It's beautiful, it's peaceful. And then after you have the hard stuff, right? Like you process the stress and all of this. And so when we developed the MVP last year, no, the year before, sorry, we had the first session and one of the second type of session, and we sent it out to a whole bunch of people. And everybody was like, yeah, we love the first session. And I'm like, how about the second session, which is actually the first of the app at the end of the day? And they're like, yeah, we kind of used it once in a while. And I was like, what's happening? And then so I talked to psychologists, I talked to all the advisors, and they're like, Marie, not everybody is super A-type going whole like you, first of all. People are coming out of 2 years of pandemic and they are very drained. So do you think they're going to stop and go back and look at trauma right now? No, they just want to recharge the battery. So we're like, okay, cool. And so the app provides value on this. And then we also, the positioning has evolved a lot. When I started, I was very focused on PTSD because the science that is published is on PTSD. And then everybody was like, well, I suffered some trauma. I don't have PTSD. I don't understand the term, And then we talked about trauma and people were like, oh, no way. Then we moved to stress. I hated the word stress, but everybody admits they're stressed. And then right now we are like, transform stress. But when I talk to military people, they are like, we love stress because we live on it. So we're still evolving the positioning. So, and this is something that is constant. The positioning for each vertical changes and keeps adapting because every time customer tell you, oh, you know what, I use it for that actually. It's like we put a sleep session in there because sleep is so important, but it was not the primary goal. But now people, especially the military people who have insomnia, they are like, oh, I use it and I fall asleep. This is so great. Like, okay. So now we push the sleep thing a lot more with them actually.
Gotcha. So yeah, it's kind of a meandering road, right? And you're kind of where you are now, which is, it sounds like it's a great use case with the military for sure. So switching back kind of the investor side. So Maria, how would you describe the investment philosophy or approach that you all use? And then what factors do you consider most important when evaluating the investments?
Yeah, sure. That's a good question. By the way, Maria, I love what you just shared. I think I really resonate with a little bit. So great entrepreneur. So we do put a lot of emphasis on values alignment since the very beginning, making sure that we are the right fit for the company as much as they are the right fit for us. So that's very, very important because it's much easier to get divorced than getting out of a cap table of a private company that is small, right? So it's very, very important to make sure you're the right fit. How do we do this? We do it in many different ways, but I think we organize some discovery sessions, we call it, and we invite some of the entrepreneurs that we like, and we spend some time with them, providing some even like help and our perspective and showing them our frameworks, like how we will look at your company. And that gives us a lot of time, quality time. And also sometimes we just do it like just putting a very small check in the pre-seed round and then seeing how it goes. And we are the best capital to bring the company to the next level because we invest anywhere from, our small check size is 50K to 2.5 million. Then we want to partner with that company for the long term, right? And we also, in terms of approach, we have a founder first approach, meaning that because we work with a lot of founders that don't fit the traditional mold, as I explained before, we have to spend a lot of time understanding their unique competitive advantages to win, because they're not going to win by raising the most capital. So what do they have, like who they are, start with their identity, what do they want, etc. And we go from there. And then we're also very big proponents of slowing down in the very early stage. I think that the less you spend like very early and the less you waste in the very early stages before you get to product market fit and you figure out the right business model, the better. And once you have that, we're like all about like just press the gas and grow, But in that early stage, we see a lot of the mistakes and a lot of the companies that screw it up is they spend too much trying to grow and it's not real revenue. It's like, okay, they're just trying to please some investors because they heard that they need revenue or whatever, but it's like maybe it's not the right revenue, or it's not the right, business that they need to put money in. So then you're even like behind, because it's like, oh, I wasted some money and I have to go back. So we almost prefer like to really slow down in the very early stage, and then once you're ready, like, put all the cash to grow.
Yeah, the
And
product market fit is like a resonating theme, right? Like it seems like a very important piece of all of this. And I think something else you said that's really interesting, it's kind of like you talked about a divorce a little bit, but the marriage is kind of interesting with founders. And would you have, any, opinion on what are some good traits that you found consistently in entrepreneurs that you all invest in?
Yeah, of course. I mean, because of our strategy, we really like resourcefulness. I think that's very important to us. How resourceful entrepreneurs are. We really like to see self-awareness, like a huge sense of self-awareness. And are they internally validated or externally validated? Like, meaning, do they need to be like in the TechCrunch or whatever, like I raise like 5 million and all the fame because they need external validation, versus I'm very convinced I want to work on this problem, and and they have a lot of conviction. They need a lot of conviction, but we prefer when it's internally validated than external. And I think there's many other traits that we look for. We look for good operators versus good sellers. I mean, I think selling is very important, but most venture capitalists out there would agree that they prefer like big sellers and telling a good, huge story. We prefer like this in the very early beginnings that are more realistic and very good operators, and they know their field very well. So yeah, those like very high level, like, the bullet points, those are the things that we really look at.
Awesome. Yeah, no, thank you very much for that. Kind of changing tracks again, switching back to Marie. You and I met through networking. So it's kind of an essential aspect of the ecosystem, right? So Columbia and NYC offer many opportunities to meet new people and build connections. Besides, what you're doing now, what strategies have you employed to promote Akesa Health and increase your brand awareness through your network?
A lot. So I network a lot virtually these days. It's actually a lot more efficient. So it oscillates, but I spend a lot of time on LinkedIn and connect with. I kind of, I do a lot of things. So I think your question has two parts: the network, and then how do I promote Akesa? So the network is actually very strategic. I look at industries I want to get in, and so I just reverse engineer. I go in there and I'm like, who is an organization I want to tap into, and then I look at who's from Colombia and might be willing to talk. So I've leveraged the Colombia network a lot, and I'm very strategic about the networking. I say, which company can I learn from? Which organization can I learn from? And that's how I go about it. And one thing I learned from networking is, and I learned this in the past as well when I was at Columbia, is always go open in a conversation. Sometimes I'm like, I talk to someone from an organization, I'm like, hey, we could partner together. And they're like, no, but there's someone else I can introduce you to. And very often this is the case. It's not the first person you talk to, it's the second person or the third person. And as long as people make an intro or I learn something during the call, it's always a great call. So I think some people go into network and they're like, yeah, I want to win. And, I want to sell something during that call. I think it's a very bad attitude. Networking is all about partnership and getting to know people, and maybe down the road, something that might help them. So this is on the networking. And then social media is an on and off thing. And so I was away from it, and then I got back into it. And so I doubled a little bit with it. Influencers is a very big thing as well. It's, they are communities where I could have credibility and I can reach out to them. And there are communities where I don't have credibility because those people, we don't have anything in common. Like, I'm going to go into a very specific example, but when you look at Professor Huberman, right? And, the Stanford neuroscientist, when you look at his followers on Instagram, right? it's a male crowd, 40-year-old, and they are very passionate about health. They are very passionate about performance, stress, all of this. Would they follow me on Instagram? Most probably not. Do they follow Professor Ivan? Yes. So finding people like this who can get you to people who could benefit from Akesa is really, really, really important.
Yeah, that's a great tactic. Yeah. So, I mean, for you, tying it back to Columbia a bit more, your alumni status there, you mentioned that you've leveraged that very heavily. Can you just give us a little insight to how you've done that, and then how it's played into your early success?
So first example, professional. So when I started Akesa, it was the fall of 2021, right? So I had the idea, we had an MVP, and there were no advisor. And I'm like, okay, I'm not a psychologist, so I need some psychologist advisors. And if I had a PTSD expert, that would be great. So I went online. There were not that many. I mean, they are like 4 big shots in the US, right? One of them is at Columbia. It's professional. And I was like, okay, so didn't answer my LinkedIn invite. I'm going to try to find someone who knows him, right? And I tried for a couple of weeks, and at some point I was frustrated. So I remember one Wednesday afternoon, I sent an email and I said, I am a Columbia alumni. And then I introduced myself. And then he got on the call, and then he liked the product, and then he became the first advisor to the business, And so very often I do that. I say, and I do the same when people on LinkedIn approach me and I see that they are Columbia alumni. I always accept their invite. I'm sorry, I'm biased, but we get so many invites, we get so bombarded. And then sometimes when I want to get into an organization where I have absolutely zero contacts, I go on LinkedIn and you can see I'm an engineer by training, right? I reverse engineer and I see who graduated maybe from Columbia Business School and I connect with them. And then once I have a foot in the door, I can find my way.
Yeah, to that point, yeah, you were really gracious to accept my early desire to talk. Just about nothing. Had nothing to do with this at that time, but you were great about that, and I really appreciate that and reflect on that conversation pretty frequently. So thank you for that.
And I believe in paying forward as well. There are so many people who have taken the time to get on calls with me when I was doing my research. I think it's important to be there for other people as well.
Yeah, I think that's a great point. And I totally agree. And I found that with Columbia, I think that's one of the most valuable things is there's been a lot of free mentorship and coaching after I've left the university itself. So it's definitely a lifelong learning community, which is really, really exciting to be part of. So kind of like the last canned question here, Marie, is for you, where do you see Akesa Health here in about 5 years? What's your vision?
So the answer has evolved. and Maya as a VC would hear this. So, when I was pitching at the beginning, I mean, investors are like, a lot of investors, I'm going to be honest, they want to see an exit strategy, right? So I was like, yeah, here are the big players who could buy, right? Then after I was like, I like this so much, I'm not going to sell it. It's not going to be, a small business. It's going to be a big business, but I'm not going to sell it. And then my idea has changed now because I'm like, you know what? I'm not saying I will sell, but I'm not opposed to it anymore because there are bigger players who have the channels to distribute, who could be, great strategic partners. So it could be an acquisition, Yeah. And the other reason is because typical entrepreneur, I have a backlog of other ideas I want to launch one day. And so I'm a 0 to 1 or 0 to 10 person. I know this. I'm good at taking something that doesn't exist and make it happen. But once it's the growth phase, I mean, I like the early growth phase, but then after when everything is stable, I'm like, yeah, it's kind, but other people are better at this. So I'm good at this when I am better at taking something that doesn't exist. So this is why my optic on this has changed a little bit too.
Awesome. Yeah, I can't wait to see where it goes. Obviously, I see the utility in it. So I'm really excited for you to see whatever happens in the next few years. Hopping back to Maria. So Maria, for you, I'm sure you have tons of people reach out to you, email you, send you things, decks, and so forth. So for you, with the business landscape changing so dynamically all the time, How do you stay informed about emerging trends in industries?
Yeah, so we're generalist investors, so for us it's very important to focus, you know, to talk a lot to other co-investors and other entrepreneurs, and if there's any specific deal in an industry that we're interested at, we would like start looking in our network and learn more about the industry. But every morning I read a few selected newsletter and blog posts and in our industry. I mean, I really like the term sheet newsletter from Fortune. I look at PitchBook and follow all the middle market M&A, and again, constantly talking to investors and entrepreneurs, et cetera, et cetera.
This is just off the kind of top of my head here, but how do you keep your energy for that, right? Like it can be exhausting filtering through all the things that come through just in a normal life, but especially people who want your money, right? And want your investment. For you, how do you keep your energy?
Yeah, to be honest with you, I mean, we have a very narrow focus, as you have noticed, right? I mean, it's not that we're like a mainstream PC. So we have like a survey in our website, and it's very easy to know like who could be a good fit with a few questions. And yeah, our funnel, it gets very narrow by the time it comes to us, because there's this common alignment of what do you guys want? Do you want to be a unicorn? Okay, we're not the right investor for you. So I think that filters like most of the entrepreneurs out there. And yeah, I mean, energy, I have a lot of energy. I don't know, wake up at 5 a.m. and yeah, do a lot of things. So anyways, I think it's a question of focus, I think, and knowing like it's okay that not everything is for you. Like the more narrow you get, the better.
Gotcha. Yeah, a much more efficient approach, right? So this will come to both of you. We'll go Maria first, but for you, from the investor standpoint, what advice would you give aspiring entrepreneurs who are looking to finance their startups?
Yeah, I think there's a few things. I mean, first of all, work on self-awareness and truly understanding your purpose, your values, what you want to do, and your mission, what your customer really wants. I think that entrepreneurs that have a lot of self-awareness and that have worked on all that early on, maybe with a mentor, a coach, or somebody like that, they have better intuition and they know which feedback to take and which one to ignore. And again, going back to that point, I think like trusting your intuition. If you have that good self-awareness and you worked on that, everyone is going to give you so much advice. And you have, and all the advice is valid, right? That's input and you can learn from it. But I think there's some advice that is going to apply to you and some advice won't apply to you. So take with a grain of salt and be curious about it, like where they're coming from. But I think investors in particular, they say things from a very biased angle. And sometimes they might even say no because they just want to move on and they say something, whatever, or you're too early or like your revenue, whatever, right? So they don't know what is best for your company. So I think like once you do all that work, then you develop that intuition and you know who to listen to.
Gotcha. And then I would pose the same question to you, Marie, from your perspective, from your vantage point. What advice would you give aspiring entrepreneurs?
So if you're seeking capital, right? Be very clear on the need. I think a lot of, and I've seen this at GE where there was always the scientist and the product push and the salespeople and the market pull. The market pull is the best. And so be clear that there is a need first. I mean, a lot of entrepreneurs are passionate about their product and it's the next big thing and it's great. But if you don't have a market, you don't have a product. So be very clear. And, I used to coach entrepreneurs and ask them, what's the need, right? Be very clear on the need. I understand the solution, but what's the need and what is the problem you're addressing and what is the pain point? So one is be extremely clear on this, be sure it's big enough. And then look at the solution, but the solution will evolve anyway. And so that's one. And same with Maya is everybody would give you advice. I mean, it's so much easier to give someone advice than actually do something. And so right now I limit the advice I take from mostly people from the industry because people who don't understand digital health or people who, know it a bit, like Maya and even generalists, but know it enough. But people who don't understand mental health would give you a lot of advice that is not relevant. And I listen to people who understand entrepreneurship. I mean, I still have friends who are extremely conservative who tell me I would never do what you do, and say, why don't you go do for a job instead? And I still hear it because they can't take the stress, right? And so, and they can bring you down. And then, it's a roller coaster. And so get ready for the roller coaster. And it's exactly like riding on a roller coaster. You go up, you go up, you go up, and it's going to go down. So, get ready for it. And it's not a weekly roller coaster or a monthly roller coaster. It's an hourly roller coaster. It's like 1 hour you get a great news, and then the hour after something is not working. So when it's working, celebrate, get ready that it's going to go down. And then when it goes down, just know that the good news will come very soon, and it's fine. And so, I spent a lot of time in Asia early on in my career, and I realize now that Buddhism has helped me. I'm not a Buddhist, but I learned a lot about Buddhism. It has helped me tremendously. It's like stay calm, and it's going to be okay. So these are some of the advice, and surround yourself with really smart people.
Yeah, no, those are great perspectives. I really appreciate that. We had some really interesting questions come in during the registration process, so I'm gonna take some of what we found to be really, really interesting for your perspectives. So this first one will go to Maria. So Maria, how can a sole, knowledgeable, and highly capable female founder make themselves and their value prop more appealing to investors of all types, both angel and VC? And then secondarily, how can that founder allay the concerns that founders have about investing in female founders? Sorry, lots of words there. If you need me to repeat it, just let me know.
Okay, on the first point, how can you appeal to investors? To be honest with you, I think we don't think about it that way. We think about you can spend your time in two things. You can spend your time on fundraising or building your business. And if you're so focused on pleasing investors, you might not be building the right business. So, of course, you need a little bit of money, right? There's some subsidy you need in the very beginning to create your company. And that's going to mostly come from angels, early stage micro VCs. I think, try to find those people that are going to help you. I mean, if there's a lot of people in that early stage that there's a lot of great resources. Work more on your company, on the problem you're solving, rather than I'm going to try to please the investors. But in terms of like pleasing investors, that's also something you want to hear. I think it depends on the fund. I mean, for a fund like ours, we would be pleased if we find those people that are good operators, that are resourceful, that they really understand the problem they're solving, and that they're very self-aware and they know what they want. And for other funds, it might be more about telling a bigger story. I mean, I think that you have to know your audience. So it depends on who you want. What do you want, first of all? And then who is the right investor to get you there?
Gotcha. Yeah. So be selective and make sure you understand what you're asking for, right? Yeah, that's great advice. Real quick for the audience, if you have any questions, put them in the Q&A box at the bottom, and we'll try and get to all of them here at the end. A follow-on question for you, Maria, is what is Crescent's competitive advantage when it comes to winning early stage deals?
Yeah, so it's interesting because, again, we have a niche approach, and today, to be honest with you, there's not like a lot of competition on the venture side. I mean, there's not a lot of capital out there, so we don't have to fight. But the last couple of years, it was crazy. I mean, it was, nothing made sense. And there were like terrible companies out there raising a lot of capital. And we were looking at that, and we just didn't invest very much, And I think in terms of winning deals, again, it's all about fit. I think that one of our unique competitive advantages is that we've become really good from telling what is a good company and what is a good founder from what is not, because most companies out there are not good. I mean, that's the stats, right? I mean, most startups go out of business. So So yeah, I mean, there's not like a great answer to that, but I think it goes back to the fit. Are we the good fit for this company? And you have to develop that relationship, because we don't want to like fight and convince an entrepreneur who doesn't want our capital to get our capital. That's a terrible way to start a relationship. We don't want to do that.
Yeah, absolutely. Yeah, that doesn't make a lot of sense, right? This question here, I'm going to pose this to you, Marie. It came in through the Q&A. Have you noticed different emphasis on wellness between the East and West Coast? I know you're located in the Miami area, for anyone who doesn't know. But have you noticed a difference like geographically in the United States when it comes to this?
Interesting question. I mean, yes, there is, because the demographics are different, right? I mean, the population is older in South Florida versus in California, But so to tell you the truth, I haven't really thought about this much. We are also a very global virtual business. So we sell online and we sell to anybody who downloads on the App Store. So it can be in Asia, in Japan, in Korea, anywhere in France, anywhere people can access the app. So we are not specifically looking at, Florida versus California. We are not a brick and mortar business at all.
Gotcha. Yeah, I mean, it's a huge question, right? And especially once you start talking internationally, it just compounds everything. So it sounds though like your product is going to be able to really cross the lines of all these countries. So it's really exciting and a huge market, obviously. Another question came in for Maria. One of the attendees says they like to undersell rather than oversell, so it feels less stressful. However, how do you get investors excited to fundraise on the vision, yet balance the future financial projections?
That's a great question. By the way, I think like projections in startups are like always, just a number. It's never right. But I think, we ask this question like to the founders, like what type of business are you building in the next 5 to 7 years in terms of company value, right? Is it $10 million business? Then we're not a right fit for you. It's not big enough, right, for us to make a return. Are you building a $50 to $100 million business? Then we're the good fit for you. Or is like a $1 billion business? Then we don't have enough capital to fuel that growth, right? So I think it's about the fit. We've been in business for long enough. We have made 60 investments that we know we have a good sense of what is feasible, depending on the industry. We're like very pragmatic and realistic about like those projections. And I think the hardest is really like the 0 to 1, 1 to 5. I think like once you like go over that hurdle and you really have like product market fit, you have the right business model, it's much easier to scale. If it's scalable, I mean, if you're building a company that is more based on a service type of business model or marketplace, depends on the business model as well, right? It's like, how is that really truly scalable once you have that found that product market fit and business model? So I think it's a lot of working with the founder, understanding their space, understanding like, the early metrics. We've seen like so many of our companies that have gone from 0 to 1 to 5 to 10 and then have exited, that we even know how it looks like when it comes to e-commerce and direct to consumer. We can see those trends of like growth and know like, are they really realistic, or they don't know what they're talking about? So I think it's a lot of experience. Yeah.
Yeah, following on to that. So for you, what do you typically see? Where do you see the major stumble points for, say, early stage versus the little further along? Where have you seen people struggle or fail, worst case, as you've been investing?
Yeah, I think like one that is very tricky, that it's what it takes you from 0 to 1 and 1 to 10 is not the same skills and the same team that is going to take you from 10, 25 to 50 to 100. I mean, sometimes it can be the same team and the same founder, but you have to have the right combination in the team, right? So I think a lot of the problems that you can stumble is like you have a huge success in the beginning because you're very resourceful, you're like a great entrepreneur, you like fight, but then once you get to the scale phase of business, maybe you go, the leader goes back to their old ways of doing things, and that doesn't quite work. I mean, I think like the problems are different. You have to deal with more people, you have to have a very good leadership, good communication, very tight KPIs and way to keep growing and scaling the company with more processes and not just throwing like things and so I think like it's a different skill set. So some entrepreneurs can do it just by bringing the right people and complementing the team. Some of them cannot. So I think like it's going back to self-awareness. What am I good at? And am I okay? I mean, it's okay if you're not good at everything. Nobody's good at everything, right? So are you okay on just getting that chip off your shoulder and just bringing the right person to help you and not taking all the responsibility on you that you have to do everything? Because if that's the case, it's not going to go well. So I think there's a lot of like that transition from team and mindset from the very early stage to the scale stage.
Yeah, I'm hearing self-awareness is really good and product market fit is really good, right? So those are common themes I'm picking up from you. So that's great insight. Hopping back to Marie for a second here. Marie, as you were kind of, working through your education with Columbia and then after that, were there any resources at Columbia that you specifically used in your entrepreneurial journey that would be helpful to others?
So I did the MBAG program. So we had specific classes. And that was specific to the MBAG program. I was fortunate to take the Steve Blank class because he taught a couple of times at Columbia. So learning the business model Canva, it's not specific to Columbia, but this is really, really, really powerful. And he has like a 700-page book, which I think is a little bit too big, but he has a lot of videos online, which are great. So that was that. And then, this is sideways, but because I took classes at LBS, at the London Business School, I took a lot of entrepreneurship classes there as well, especially on emerging markets and all of this. But I was not involved actually into the accelerators and any of those at the time. But getting plugged in with the community, getting plugged in with other entrepreneurs is really important because they know everything, they know all the resources. It's a great energy and it fosters, helps you go through a lot of stuff, brainstorm ideas as well, know what's happening, tools, all of this. So getting plugged in into the community is really important. Yeah.
Gotcha. Another question here for Maria. Sometimes businesses take a few years to figure out the financial model and their path to profitability. How do you get businesses to want to invest while you figure out that business model, aka kind of a half-baked business model, I guess, with a great idea?
Yeah. So yeah, that's a really good question. So sometimes there's an evolution of the business model because you may have a great vision, right? But that takes like a lot of time and money. And in the meantime, you have to survive. Mostly you can get funding for survival, or you can make some revenue for survival. So sometimes you have to evolve the business model. We've seen that with a lot of our health tech companies, for example. They start going direct to consumer because it's the only way they can get some revenue, but then they end up evolving into a different business model that, maybe they're working on FDA approvals or something like that. So I think there's always an evolution and again, this goes back to the point of what type of investor you're looking for, right? If you're looking for Silicon Valley, huge growth at all costs, you have to paint a very big vision and have a plan to do that. If you're talking to a fund like ours, is I need this amount of money to get to break even and be safe so I don't die. And then once I get there, I have a good plan to scale. So it depends on what you want to do and when you want to spend your time on. If you want to spend your time fundraising and you have very good skills at fundraising and you're the right person to do that, then do the former. Otherwise, it's just focus on how can I make money, and it goes back to again like identity, who you are, product market fit, and then like how can I make money out of this. And some entrepreneurs are not good at that. They're just very good at ideas and vision, but then they just have to partner with somebody who is actually good at making money. There's a lot, that skill is, it's a skill that a lot of people have. So how do you look for that partner? Maybe is it a co-founder, or is a board advisor, or somebody that is going to help you in the very early beginnings to figure out like how can I make money out of this. It's a great idea, but like some entrepreneurs, they don't know what they don't know. They don't know what it looks like to have a good business. They don't know that you have to have healthy gross margins and like target like certain characteristics to get there. So just complement your team.
Yeah, and so like a good follow on to that, a question that came in, either in you or colleagues you see in the space, Maria. What are some valuable qualities you see in these people who are in VC and private equity? What kind of things should entrepreneurs be looking for quality-wise in these types of people they're trying to create relationships with?
Yeah, I think that's very personal to who you are and what you need. I think maybe you have a very specialized technology and you need like a VC that is super specific and that has that expertise. That might be a way to do it. We personally, we look for the entrepreneurs who know their stuff. So we're not going to overstep in on their field. They're the expert on their field. We're going to help them on the capital side to how to fund their business and how to really find their unique competitive advantage. So it depends on what you need. I think for some entrepreneurs, it's great to be part of these programs, some incubators, accelerators, because they're first-time founders and they need that help. I think, it also, sometimes you get the money, like you don't have to be naive. It's like if you're going and working with some of these traditional venture funds, they're looking for one of the companies out of 20 to return their fund. And if you're not performing well, you're a little bit stuck, they're going to dismiss you. So just think about that as well. It's like, are you okay with that? So again, it depends on going back to the what do you want and what type of business you're building, and try to match that with the type of investor that is good for you.
Awesome. Yeah, thank you for that. Another question came in. This one's going to go to Marie. A question from one of the attendees. I'm going to summarize it. It's a bit long, but how could they find more resources to find trustworthy people to help work through specifically their models, their business models or financial models? Have you found any good resources, Marie, during your time that you would recommend to others?
So there are videos online on YouTube. I've learned a lot from YouTube stuff. And then, in your network, right, find people who are just very good with numbers. I mean, CFOs, salespeople. It doesn't take very long to crunch financials, actually. It's not the next digit that matters, is having the right mindset, and not the right mindset, but the right rationale, and being able to make the right assumptions and just building a simple model. A lot of people get very hung up on financials and put so much detail. It's the thought process of the financials that is important. So I think looking into your own network, finding someone from the industry or similar industry, like if you go direct to consumer, don't ask someone who sells B2B, because they don't understand, direct to consumer. And then explain your model, explain what you sell and work with them. And it's once again, financials are all about understanding the rationales and the assumptions, and then you can adjust the assumptions as you start getting data.
Gotcha. And one final question, I'll pose it to both of you, a minute each. What have you both learned about board seats and maintaining your control on your visions as you're working through these problems, or in your case, the companies you've seen, Maria?
Yeah, that's a great question. I think very early on, you don't need a board, like, make your life easy. But I think once you raise like some meaningful amount of capital, like $1 million plus, I mean, you will be asked for board seats. And I think, generally there's 3 seats, investor takes 1, founders take 2. I mean, it depends on the case, right? But there's sports and all shapes and colors. But I think you just have to make sure you really trust that person, because if you take a random investor with that board seat, it's not gonna be pretty. So make sure that to whoever you give that board seat, you really understand what are the motivations, what are the values, and are they aligned to your values and your motivations? Because if not, it can be hell. And so yeah, just do your diligence, before you give that board seat away. And yeah, I mean, I have a lot more thoughts, but yeah, go ahead, Marie.
And my answer is very similar. So I get approached all the time. I want to be on your board. I want to be on your board. Come on, I'm a tiny little thing right now. Why would I get bothered with a board member? It's like, so don't take any board member early on. And then right now it goes for everything in the business. I look at, rational, my intuition, values. And so values are very important. And I pay a lot of attention to this and get people who are aligned on the vision of the business. Because when push comes to shove, it's, are we climbing the same mountain? I don't care if you take this route or I take that route, but we are going to get there, right? And so you can defend your path is faster, my path is faster, but we agree on the goal. If you have board members who don't agree on the vision, it's going to run into big issues. So values and making sure they are aligned with the mission of the company is very important.
Awesome. Yeah, thank you both for that. While we have just a couple minutes, I just open up a minute for each of you. Marie, anything else you want to say, or any advice you want to provide to the group?
So, I think entrepreneurship is hard. People who tell you it's risky, it's difficult, it's stressful, whatever, right? But it's a beautiful journey. I mean, not only you bring value into the world, I think it's a huge growth opportunity as well, because you get stretched so much. So for people who are interested, I think don't hesitate. It doesn't have to be the next unicorn. It can be a small business first, get your feet into it and try it out. I think people overcomplicate a lot of things, sometimes it's just find a problem and develop a solution and take it from there, right? It's, we have this big idea of like, entrepreneurship is I'm going to buy, build a 1 billion unicorn, right? Entrepreneurship is just solving a problem, first of all. And so if you enjoy solving problems and building businesses, then give it a try.
Love that. What about you, Maria? Anything?
Yeah, I mean, I think out of my mind, I think that you can really do truly anything you want. You just need to understand what you want, which is already very hard in itself, what you uniquely good at, and what are the trade-offs that you need to make. Because I think like a lot of the problems I see with a lot of entrepreneurs, they're very naive with the trade-offs, and they want the cake and eat it. And just really spend time doing that.
Awesome. Yeah. So as we're wrapping up here in this last minute, I just want to thank obviously you both for being incredibly gracious with your time, and giving this, great insight from both perspectives of the entrepreneur and an investor. And it's incredibly exciting to see where everything goes for you all next. And obviously keeping in touch with you will be super important. For the attendees, thank you all so much for joining us. And we hope it's been valuable to you. Obviously, this is being recorded, so it'll be available later. And there will be a slide here posted. Someone asked about staying in touch. The posted slide that should be coming up here in just a second has information for you all of how to stay connected. please come and join the SPS Entrepreneurs Network. We're growing, we're new. I am one of 3 in the inaugural working group that includes myself, Connie Ko, who you saw earlier, as well as Peta Tori. And we would love to have you all as we start looking at committees to continue to grow and scale our group. So with that, thank you both again for coming on as panelists today. Really appreciate you. And thank you to all our attendees as well.
Thank you.
Thank you.